All right, welcome. This is part 2 of chapter 6, and when we last left off, we had converted or displayed the contribution format income statement in the format or equation format shown on the screen right now. And this, of course, shows things in total dollars, right? The formula that we're looking at shows total sales dollars minus total variable expenses minus fixed expenses equals your profit in the end. And all we're going to do now is break that down to its smaller elements. What I mean is sales, of course, can be thought of as per unit level, right? And that's the total quantity sold represented by Q multiplied by the price per unit, or the sales price. Q times P will give you the total sales dollars. This breaks it down to per unit and unit numbers instead of total dollars. And the same thing can be said for variable expenses. Variable expenses in their total sense can be made up of the same quantity sold multiplied by the variable expenses per unit, which we'll represent as V. So we can break that original formula down as follows. Profit is equal to sales price per unit times the quantity sold. Then from that we would subtract the variable expense per unit multiplied by that same quantity sold. Subtract out your fixed expenses and you get to the exact same number. This is plugging in those same numbers and we come up to the exact same result when we're talking about 401 bicycles at the same per unit numbers that we started working with originally. All we're doing here is changing the actual quantity, which would be Q. And remember that not only sales is driven by the quantity, but variable expenses is also driven by the quantity. When we break things up into the contribution format income statement, the variable expenses are based on number of units sold. So that same number that we see here is the same number that we're going to use to determine total variable expenses. We can further refine that formula one step further, right? Rather than multiplying the sales price by the quantity and again multiplying that same quantity, that same Q number by the variable expenses and subtracting those two products, we can really just do one multiplication by that quantity, right? And just take the sales price minus the variable expense, both on per unit levels, and multiply 1 times by the quantity. And another way to think about that or refine that is we already know what the sales price per unit minus the variable expense per unit is, right? And that's the contribution margin on a per unit basis, or what we'll refer to as unit CM, right? Unit contribution margin. So if we know what the unit contribution margin is and multiply that by the quantity of bicycles sold or whatever units we are selling, subtract out the fixed expenses, we get to the exact same place. So we can really save a lot of steps just by knowing that contribution margin on a per unit basis. Plug in those very same numbers if we know what the unit contribution margin is, which is $200 times 401 units that we've sold. That comes out to $80,200. Subtract out our fixed expenses, and of course we come up to that same profit number of $200. So all we've done is take the contribution format income statement and, right, what we're looking at here, and express that as a formula that has been further refined as shown here. And it's been refined 3 ways, right? First we have the formula, then we refined it down to per unit amounts. Then we simplified the multiplication, and then finally we just brought in the unit contribution margin and made one simple multiplication. So there is no subtraction once we already know this. And what we're looking at here is really a preview of the top half of the handout that you were given for today's class. If you look at the Chapter 6 handout, you will see the total dollars formulas can be seen on the top, and the per unit formulas can be seen down on the bottom of slide number 1. And really what I want you to remember and keep in mind is that we're looking at the exact same formula every time. It's really just the contribution format income statement expressed as a formula and expressed in different ways and at different levels of refinement. You can skip over learning objective number 2 in the chapter or skim over it, but I won't be testing you on it and it won't be part of the homework. So we're going to move right into learning objective 3, which is all about expressing the sales, variable expenses, and contribution margin as ratios, right? So we started off at expressing all those in total dollars, which we're always going to do, but remember that sales, variable expenses, and contribution margin, which is the most important, can be expressed on per unit basis as well, but they can also be expressed as ratio. Keep in mind, we are expressing these all as ratios of sales, right? So what percentage of sales is sales? Well, it's always going to be 100%, no matter what you use, right? Whether you're using per unit or total dollars amount. And same thing goes for variable expenses. We are expressing variable expenses as a percentage of total sales dollars or per unit sales dollars. So, to come up with your variable expenses expressed as a ratio, you can do either of the following. You can take your variable expenses divided by your sales either on a per unit level, or you will get the exact same result by taking your variable expenses on a total dollar level and dividing by sales on a total dollar basis. You will come up to the exact same result. For contribution margin, you can take your per unit contribution margin, divide by sales on a per unit level, or you can take your total dollars contribution margin, divide by total dollar sales, or there's even a third option. If you've already got your variable expenses and we know what sales is always going to be 100, you can simply subtract and you can get to your contribution margin expressed as a ratio, which is also a very powerful tool for us. So very simply, especially once we know per unit amounts, very easy to calculate our contribution margin ratio, simply by dividing the contribution margin per unit by the selling price per unit. And in our example, it comes out to 40%, at least our baseline information. We are going to change that as this lecture goes on. And the reason the contribution margin ratio is such a powerful tool is because it really helps us predict and see what profitability will be simply by using one multiplication by that ratio. So in this example, assume our company increases sales by $50,000 and the CEO wants to know from you, what will that mean to profitability if we increase our total sales by $50,000? Well, it's really easy for you to calculate that profits will increase by $20,000 simply by multiplying that expected increase in sales by our contribution margin ratio, right? 50,000 times 40% is $20,000, and that is a real dollar amount that our profits will increase if we can increase our sales by $50,000. Notice, of course, contribution margin ratio will increase by $20,000, and so does profit. So, based on that, yet another way we can express the contribution format income statement as an equation is as follows. Profit is equal to the contribution margin ratio times total sales dollars minus fixed expenses. So, again, using that same example, if we increased our sales volume to 500 bicycles from 400, what would management expect to profit? So what would the net operating income be if we made that increase? Well, we know that our contribution margin ratio is 40%, and we'd be increasing our sales revenue to $250,000. Very simple to see that our contribution margin would be $100,000 and our profit would still be $20,000. So the exact same thing in a far more refined formula. And so this is the next formula or equation you will see on that handout for the chapter. And again, you'll see that we're slowly building up that handout 1 from chapter 6. We're just adding all of these formulas or equations to that slide, and in the end we will have 7, of course. But really, I want you to keep in mind, it's really just expressing that contribution format income statement in 7 different equations that are really just the same one equation. Just the ones on the top of the slide express things on a total dollars basis, whereas the ones on the bottom express things on per unit amounts. And my advice to every class is always make your life easy. If you're working a problem out, be it in homework or be it in an exam, and the question is talking about things in per unit amounts, go ahead and pick whichever formula or equation is already expressed in per unit amounts to make your life easy. Or if you're working with something and it's talking about total dollars and everything that it's giving you in the hypothetical is in total dollars, well then just go ahead and pick whichever the total dollar equations makes your life easier. Remember, these will all get you to the same place, just some of them are already refined and will take less work. So go ahead and take the less work if you like, unless you want to just challenge yourself, which I know most of you like to do. All right, we'll go ahead and stop part 2 of chapter 6 here, and we'll pick up with part 3 for learning objective 4. See you then.